Welcome to today's webinar with Algorae Pharmaceuticals. I'm Danica Warburton, the Investor Relations Representative for Algorae, and it's my pleasure to introduce Executive Chairman David Hainsworth, who will provide an update on the company, the operations, recent successes and growth outlook. So the format for today will be that David will give a short presentation on recent developments, and then we'll open it up to a Q&A.
Thank you, Danica. Good morning, everyone. Thank you for joining us. So earlier today, we actually issued an important announcement. I'd like to take a moment to elaborate on how this development aligns with our advances in the broader objectives at Algorae. So we actually announced an exclusive commercial licensing agreement with Zydus, covering 10 products for the ANZ markets. This is a global giant in the pharmaceutical universe with a rigorous due diligence process and very long-term strategic ambitions. Just to give some context to the company, so they're the fourth largest pharmaceutical company in India. They have a $14 billion market cap in Aussie dollars, $4 billion in annual revenue. They're operating in 55 countries with over 27,000 employees. And importantly, they spend $500 million a year in R&D. So this agreement is the fourth deal we've executed in 9 months with some of India's most respected companies. And I think it lends significant credibility to the capabilities of our emerging commercial team. Just as a reminder, the 4 companies we've now executed deals with are Sakar Healthcare, Cadila, Dr. Reddy's, and now this morning Zydus. So let's take a step back. So Algorae has 2 distinct engines of value, AlgoraeRx and AlgoraeOS. So I'll start with the commercial business, which is AlgoraeRx. So we're building a portfolio of generic and specialty medicines, which will be sold to institutional channels in ANZ. And loosely, the revenue will come in 2 different streams or buckets. So we have the Algorae branded generics. These require TGA approval. And once registered, they can be sold under our brand with higher margins than the other distributed products. Distributed products are already registered in Australia and they can be immediately sold under the manufacturer's brand. So in other words, we've got some near-term cash flow alongside longer-term margin growth in what is a rapidly expanding portfolio of products and partners. So moving to supply. So supply is a critical component to this business. And I think we've now demonstrated that we can source quality products from tier 1 global manufacturers, and Zydus is no exception, that's for sure. Moving on to the second pillar. So AlgoraeOS is our AI drug discovery platform. It's the second engine of growth. And we've been building this platform over the last 2 years in collaboration with 2 of the most credible scientific institutions in Australia. So UNSW, which is ranked in the global top 20, and CSIRO Data 61, which is part of Australia's National Science Agency. The platform's designed to predict synergistic behaviour between 2 drugs in silico, enabling rapid identification of combination therapeutic targets, which we will then go and validate with the Peter MacCallum Cancer Centre, which is one of Australia's most respected oncology institutions. They're based in Melbourne. So Peter Mac has a state-of-the-art wet lab. We chose them specifically because they have high throughput screening using a lot of robotics, and we're very proud to be collaborating with an institution of this size and calibre. Our second validation program, so we've had 1 already. Our second one is about to commence in parallel with the next version of AlgoraeOS, which is version 3. So the outputs from AlgoraeOS create the internal pipeline of assets, which we will either co-develop or license. So moving on to the team, and I particularly wanted to introduce really the team for our commercial business, which is emerging. So I'm regularly asked how a company of our size secures deals with companies that are worth $10 to $20 billion. You know, and putting that in context, Zydus, as I said, is a $16 billion company. And the answer really is the team. So Vishal Shah, he's our Chief Commercial Officer. He's also the Managing Director of our commercial subsidiary, which is AlgoraeRx. Now, he's held senior roles at Baxter and at EBOS. And critically, he's got the relationships and the cultural understanding to do business in India. And that cannot be overstated. The second is David Galland, who's our COO and also Director of Algorae, the parent company. He brings over 20 years of industry experience, most recently at HPS, where he was the General Manager. HPS is a subsidiary of EBOS. And rounding out the third key member of our commercial team is Waleed El-Siad, who's our incoming head of sales. We've recently recruited Waleed, and he's joining from Sandoz with a strong track record across public and private hospital portfolios. So these are highly respected people who've been leading senior roles because they believe in what we're building commercially at Algorae. And importantly, their compensation at Algorae is principally performance-based equity that's tied directly to market cap and revenue milestones. So they're backing themselves with their careers and their income. And I think when you have people of this caliber make that sort of bet, and then we see billion-dollar companies keep validating that bet, I think it's increasingly clear that Algorae shareholders are part of a really significant opportunity. So bringing ourselves to that opportunity, so the ANZ market in pharmaceuticals is very mature. It's a high-value market with a strong institutional demand. Generic and specialty medicines represent a significant and growing share of that market, and our commercial model is designed to capture that revenue opportunity systematically with a growing pipeline of generic and specialty medicines. We've already demonstrated that we have the right team and a proven ability to attract world-class supply partners. The AI platform is longer dated upside, but it's potentially transformational. So this has been a substantial undertaking to build that platform with credible institutional partners, and the AI platform is becoming a genuine asset in its own right. So just in closing on this initial presentation, the deal we announced this morning is not a one-off. It's part of a pattern, a deliberately constructed pipeline of relationships, products and capabilities that we believe will generate substantial value for our shareholders over time. We appreciate the continued support of our shareholders, and we're genuinely excited about what comes next. So I guess I'll hand back to you, Danica, for questions.
Thanks very much, David. That was great. So we have had a lot of questions come through via email and the Zoom registration page. So thank you to everybody who sent them through previously. David, first off, you did touch on this, but the Zydus agreement announced this morning is huge news. 10 products across injectable, oral and specialty medicines for Australia and New Zealand. So, you touched on how, as a counterparty, they are significant. Can you tell us a bit about how the deal came about and what it means for the size of Algorae's product pipeline going forward?
Yeah, sure. So, they're certainly one of the largest pharmaceutical companies that we've encountered, and one of the largest ones in India. So we're obviously delighted to be entering into this agreement with them. In terms of the process, it's been probably 6 months of discussion. We've met with them twice in India now, including a few weeks ago in Ahmedabad, which is where their corporate office is based. And they've also visited us once out here in Australia, which has been great. When we were there a few weeks ago, we had an opportunity to spend a day with our partners there, and including a day with the team at Zydus, which was fantastic. And we went through a number of their manufacturing facilities in Ahmedabad. It's fair to say it's hard to really appreciate what these facilities look like until you actually see them firsthand. They're certainly enormous. They're world class, and very, very impressive. So, in terms of the actual agreement itself, so it's an exclusive agreement which covers 10 products across injectable, oral and specialty medicines. And these guys have an enormous portfolio. So it's continuously expanding through their very strong R&D program. And they also have a very strong LOE strategy. So we expect over time the size of that portfolio to grow materially as we develop both our ANZ strategy here, but also develop our relationship with Zydus.
Okay, and Daniel has asked on the TGA progress and the timeline to first product. He says, with 18 products now contracted across 4 global partners, the TGA pathway becomes a critical execution variable for the TGA has accepted your first dossier for evaluation. Can you walk us through what happens next to give shareholders a realistic sense of the timeline to a registration decision?
Yeah, sure. Look, that's an important question. So of the 18 products that are contracted, 17 of those fit in that TGA basket. So as you mentioned, our first dossier has been accepted by TGA for the first of those products, which is a Sakar product. So that will go through formal evaluation now, which is obviously an important milestone. So Acceptance basically means that the submission met the thresholds for review. And I think that really reflects the quality of the documentation that our commercial team and also our manufacturing partners have submitted. So that formal evaluation for a particular molecule takes approximately 12 months. Can be slightly shorter, can be slightly longer from that point, but I think shareholders can basically work around 12 months as a process. And during that time, the TGA will conduct their own technical assessment. They'll review the clinical data that sits behind the dossier and the manufacturing standards of the manufacturer themselves. What I would say is it is a very well understood, well-travelled pathway. So it's not something new that we're trying to encounter here. The other part I'd like to flag too is that, as you mentioned, there's 18 products, 17 going through TGA. So this is not a single product story. So we have 17 products contracted across 3 partners, and we'll be sequentially submitting dossiers based on our commercial launch strategy. So these will be going in one after the other and starting that 12-month shot clock, if you like. So while the first registration is obviously an immediate catalyst that shareholders should watch for, the pipeline behind it is already being built and scaling rapidly.
Yeah. And let's say TGA registration comes through on that first product. What does day one actually look like? Who are you selling to? How does the product get to market, and those distribution relationships, are they already in place?
Yeah, so initially we're targeting the institutional channels. So the institutional market in ANZ operates through a relatively concentrated set of channels, which is where our commercial team are highly experienced. So they've had a lot of experience over 20 plus years each in navigating these particular institutional channels. I would highlight to Waleed, who joins us in May, of our head of sales. He was most recently head of hospital sales at ANZ at Sandoz, which is one of the largest generic companies in the world. He knows these procurement teams personally, and also David and Vishal have spent more than 20 years in these same channels. So these are not relationships that we need to go out and build today. These already exist. And when registration comes through, we won't be introducing ourselves to the market for the first time.
Brilliant. Okay. And a few investors have asked questions on the revenue timeline. So the presentation flags commercial revenue recognition in 2026. Can you give shareholders any more colour on the timing and whether first revenue is going to be meaningful, or will it be more symbolic at first?
Yeah, I think this is an important question to get our head around. So we flagged first commercial revenues in 2026. However, I would emphasise that this year is principally around pipeline execution and growth. So we do have agreements like with Dr. Reddy's, which provides us an opportunity to leverage some short near-term sales. And we're also progressing several other additional initiatives to capture revenue this year. Now, on that front, as those discussions progress, we'll obviously update the market. But from there, the pipeline, it really scales and the margin story improves materially as we start bringing Algorae branded generics on stream. So as they get to the end point of that registration process. So I guess, in terms of the revenue, I'd frame it less as a revenue number to get excited about in isolation, and more as the first domino from our rapidly expanding pipeline and launch strategy. Equally, I'd probably highlight as well that about the way that our commercial team is compensated, because I think that's relevant to this revenue piece. So their equity is directly tied to market cap and revenue milestones. So there are 6 milestones in total, 3 market cap and 3 revenue related, which the equity package is tied to. So in other words, their objectives are aligned with shareholders' objectives. And I think, these guys have left obviously extremely important and senior roles and backed themselves to continue building what we believe is a really exciting company.
Yeah, great. Thank you. And Paul has sent through a question on partners and the quality of your counterparties. You have sort of touched on this, but I'll read it out. Now have you therefore executed supply agreements with 4 serious global manufacturers? How did Algorae get in front of these companies of that scale? What does it say about how the market perceives Algorae as a commercial partner? I guess you could sort of break it down in layman's terms, the nuts and bolts of these partnerships to give shareholders a bit more insight into.
Yeah, look, I think the real answer to that question is it comes down to the team. So, keep in mind, AlgoraeRx was only incorporated last year, but the three key members of our commercial team, so David, Vishal and Waleed, bring more than 60 years of combined experience in this industry. So they've been around a long time. And I'd probably point out specifically at the moment, Vishal has been absolutely instrumental in building these relationships. So the traction that he's been able to achieve in 9 months is well ahead of where we expected to be at this point. So just for context for shareholders, so Vishal was actually born and raised and went to university in Ahmedabad, which is a key city for manufacturing, a city that we've been to twice now, and many of the manufacturing partners that we're seeing are from there. So I think that cultural connection can't be overstated. And Vishal's certainly been doing a wonderful job. So we've got 4 executed agreements now, as you mentioned, with 4 of India's most significant manufacturers. I don't believe that's a typical outcome for a company at our stage and with our market cap.
Yeah, we'll have to get Vishal on the next webinar, perhaps, and hear from him directly. But absolutely, I think it speaks volumes how well the team's executing to be getting these amazing deals, especially for, as you said, a small company. Moving on to a question we received on AlgoraeOS. Daniel has asked if, the AI drug discovery story sounds exciting, but it also feels a long way from generating value. Is AlgoraeOS a distraction or a genuine asset? How can you answer that one?
Yeah, okay, interesting question. Look, thanks, Daniel. I'll push back slightly on the framing of the question, I think. So AlgoraeOS is not a story we tell to make the company sound interesting, and I appreciate there are some companies using the AI as a buzzword. We've actually spent 2 years building this project in collaboration with UNSW and CSIRO, and now we're validating it with the Peter MacCallum Cancer Centre. So these are incredibly reputable institutions that don't just lend their name to things that aren't scientifically credible. So I guess that's the starting point. In terms of commercialisation, though, we do have a very clear pathway. So the platform generates therapeutic targets that we can either co-develop or license. There's also optionality around the platform itself as a standalone asset, and both of these are genuine pathways to value, we believe. And I think too critically, the program doesn't compete for the capital that's going into the commercial business. So it's largely funded through the R&D tax incentive program, RDTI, and also non-dilutive funding. So we have collaborations with UNSW and CSIRO, which means we're leveraging their expertise and resources alongside our own. So, for example, outside of the funding that comes from institutions like CSIRO, we also have access to a lot of their computational infrastructure, which we receive for free. So a lot of what we're building here is very capital light. So while we think of our commercial business obviously being that near-term value engine, our AlgoraeOS is obviously longer dated, but I think the value in that business is certainly asymmetrical.
Thanks, David. And following on from that, Matthew's sent a question through. He's asked, David, how does the company intend to use the $5.5 million cash and the $3 million Scott Pack facility? And specifically, how much of that is being directed toward product expansion and commercial execution versus the R&D spend that you just mentioned?
Yeah, okay, thanks, Matthew. Yeah, that's a great question. So perhaps I'll take the R&D side first, so which dovetails into the previous question. So our research programs operate within a very capital light model. They do that by design. So obviously AlgoraeOS is developed in collaboration with CSIRO, who provide us funding and resources. The expenses that are real and direct for us then go through the R&D tax incentive program. So we're really building some very credible science here without the typical sort of research burn that you might see in other R&D. On the commercial side, and I'm getting to your question, Matthew, but on the commercial side, cash resources are going to be allocated towards regulatory submissions. So we're talking about TGA fees, licensing fees, etc., operational costs, and our commercial capabilities. So I'll probably frame it this way: the funds that we're putting into that commercial business really are preloading or front-loading future revenues. So the dollars that go into, let's say, a TGA registration for a product that we don't receive revenue for in 12 months' time is still money that is really well spent, because once we get through that process, we're able to earn back the cost of that expenditure very quickly. And in terms of the Scott Pack facility, so that really covers how we use those funds, the $5.5 million. In terms of the Scott Pack facility, this is a $3 million receivables facility. So we don't use this for corporate expenses. It's structured to fund inventory. So as products come to market, we will use that to draw down as we place purchase orders for inventory. And we've specifically gone with Scott Pack to enable us to scale with our commercial activity and manage our cash flows. And as that business scales, Scott Pack will certainly scale with us too.
Perfect. Well answered. Thank you. A question now on valuation and where the market is at on Algorae. I'm really keen to get your thoughts on this. It was a question that came through from a couple of different people. I've tried to put it together. So the share price has been sitting around 1.2 cents, currently 1.3 cents, or 26 million market cap. So Algorae now has contracts with 4 global manufacturers worth billions in combined market cap and 18 products in the pipeline, as we've discussed throughout this webinar. What needs to happen and by when for the market to start pricing in the commercial progress you've made, do you think?
Yeah, okay. Look, I'll tackle it a couple of ways. So perhaps the catalyst that I see coming up, which let's break it into the two divisions. So from a commercial standpoint, the 3 catalysts I think we can point to. So TGA registration as we move through that process, recognition of revenue. So as we said before, we'll have some revenue coming through in 2026, and then really the revenue ramps up materially from there. And then continued expansion of the partner pipeline. So this probably looks like additional partners and or increasingly more products from those existing partners. So I think there's a significant opportunity there, we believe, and in this commercial space in particular, where our commercial team sees new opportunities every day, which is really exciting. And I think I'd add to that, we've got a tailwind too of a health system that increasingly needs generic supply. So I think we're operating in a really good sector. So there will be a lot of catalysts and a lot of news flow for shareholders moving forward. From the R&D perspective, I think we can focus on catalysts like further development of AlgoraeOS. So as I mentioned, we're moving to version 3 now. Peter Mac, we're just about to kick off the next round of study with those guys. So 3 to 6 months roughly in terms of delivering a result there, and potential future partnerships and collaboration around the actual AI system itself. In terms of just like a market observation, look, I think we ran from 0.7.8 to 2.4 was obviously extremely quick rise in price. We've come back to 1.2 here. We've certainly seen a lot of pressure on the price since we had the options exercised. So what I will say on that, having seen sort of the movements that come through, is we saw quite a few traders move into those options, buying around 0.1, 0.2, leading into the option exercise. A significant amount of those were exercised, I think, by short-term traders. So, it's the classic short-term arbitrage, if you like. And, and a couple of these were reasonably sizable as well. Now, of the ones that bought, who clearly intended to be there for, let's call it a short-term trade, that selling really commenced immediately after the options were exercised. So that's placed an enormous amount of selling on the stock that I think sits well and truly outside the underlying business. In other words, this is not for fundamental reasons. This is for trying to capture that arbitrage. I'm pleased to report the largest of those option exercise people who clearly was not legitimately there to be a shareholder. They've sold approximately 70% of their holdings so far. So obviously every day that selling works its way through the system. I'm confident that once that has occurred and finalised, that we'll see this market cap and obviously the price find a natural level that perhaps reflects more the value that we've created to date. And probably of importance too, for shareholders to know is that the buying that I'm seeing is predominantly long-term existing shareholders. So we have a very significant group of shareholders who've been extremely supportive over many years, and those people are expanding as well. And I'm seeing them buying on the register every day. So I guess the value for shareholders is we're seeing some of this trading volume change hands and go into the hands of longer-term shareholders. I'm also seeing a few meetings now where we're increasingly adding new shareholders to a list who are either people who've come along recently because they're aware of our commercial team and interested in backing those guys, or see the opportunity to the price is back at sort of 1213 and the opportunity that presents.
Fantastic. Thank you, David. We're almost out of time. So I think, you've summed up nicely there the upcoming catalysts and, reasons why investors should sit up and take notice of the company. However, if anyone did have any further questions, or if we didn't get to your question today, please do feel free to reach out to David or myself. Details are on the bottom of all the ASX announcements. We'd love to hear from you. David, did you have any final comments you'd like to leave investors with today before we wrap up the webinar?
Probably just thank you to the loyal shareholders that we do have. We certainly appreciate your support. We look forward to delivering a tremendous outcome for you guys. And obviously Zydus today, I think, demonstrates again that we're certainly able to kick some goals here for a very small company. We have $18 million a year, and we're operating with some very significant counterparties in India at the moment. So it's exciting times ahead.
Absolutely. Thank you to all shareholders who joined the call, and we'll end it there. Thanks, David.
Thank you.